if someone would have told me that the VIX would be around 12 here in mid-May 2024 a few months ago, I would not have believed it. But then again, that's what makes a market. Let's see what this means. I mean, at the end of the day, when we look at volatility being cheap, and the VIX does have limited downside, it typically doesn't go much below 12. In an extreme case, you might see a 9 print. It's just, I think it's worth reminding ourselves that volatility is a mean reverting asset. Meaning, I guess it's hard to call it an asset, but it's not an equity or a commodity price that technically can go higher. It ultimately mean reverts. And so when we look at the VIX here at near 12, we see that we're at the really very, very lower end of it, historically speaking. Again, it's possible to see, a 10 or a 9, but that doesn't last very long. So I guess the question really becomes what to do here. From my perspective, buying some sort of protection, portfolio protection here makes a lot of sense. VIX at 11 is much better than VIX at 20, which it was just a few weeks ago, or VIX 15. So that does not mean that we have to go short equities. It just means that we can buy cheap options. So like one way, for example, one way to do it is would be to essentially just buy some puts in, let's say, the SPY, which I'm just overlaying here in the chart so you can see it. Essentially, the SPY, the S&P 500 tracker ETF, you can see moves inversely with the VIX for the most part. It goes up when the VIX goes down. So we have a good amount of complacency here. Again, that does not mean that we have to be short equities, but it doesn't take much for stocks to just kind of consolidate here. Maybe the S&P, has another 5 to 10% corrective move at some point to the next number of weeks or so, or a couple of months. And that would probably help the VIX get back up to 20. So typically when it comes to these kind of trades, I personally don't use very short dated options because I always find that to be, I have almost no way to control the risk on that. But, so here right now in mid-May, I'd probably look to use probably something closer to August options. Like I wouldn't be using June or July options. That's just me. Because again, if things don't work out, then I really have no way to manage my risk. But if I use August options, and I hold the trade for a number of weeks, not too long, then I kind of deal with that. Again, the point here is not so much to be short stocks, but just to realize that when the VIX is at the levels we're seeing right now, which again is historically very low, it does very limited downside. So it becomes basically an asymmetric sort of setup, which is good. It's got limited downside and a lot more upside potential than downside, if you will. So anyway, hope it helps, and we'll see you again in the next video.